Welcome to the News and Views podcast by the Fintech Times. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFC News and Views and follow us at the Fintech Times.
Hi, I'm Polly Jean Harrison, features editor at the Fintech Times.
Hi, I'm Francis Bignell and I'm a journalist at the Fintech Times.
Hi, I'm Tyler Smith and I'm a journalist at the Fintech Times.
Hello, and welcome back once again to the Fintech Times News and Views podcast. It is a gloriously snowy day here in the UK at the time of recording, at least it is where I am. Tyler, Francis, is there snow in London or are you nice and clear?
You know, I don't know about this snow. Everybody keeps telling me it's snowing, but I still have yet to see it, unfortunately. No, it's been raining a lot here, but no snow. What about you? What about over where you are, Francis? We live at opposite ends of the city, so
We do, and unfortunately, I'm sort of facing the same thing that you are. The most that we've had here, I'd say, is thick rain. Is the way I describe it. It wasn't quite snow, but it was very visible.
I promise you it is snowing and it is ridiculously thick and white. Looking out my window, I am blinded by just the sheer amount of sparkly white snow outside. But anyway, I'll consider you guys lucky because everything just shuts down where I live when it's the tiniest sprinkling of snow. So it's been a bit of a nightmare trying to get anywhere or do anything.
I love snow though.
I know, I love playing in snow. The concept of snow is fantastic, but living in the countryside, just you are literally stuck at home. Which is fine, because then you get to enjoy the snow. But anyway, less snow, more fintech. What are we going to be talking about this week? Francis, what's your article?
So this week, I'm going to be discussing some findings from Novo Payment about how small banks are turning to banking as a service solutions to keep pace with larger banks.
Amazing stuff. And Tyler, what's your article?
this week I'm taking an article from our monthly theme, and today we're going to be discussing how the advent of the Metaverse is bringing together different sectors of fintech. What about you, Polly?
Amazing stuff. And then I'm going to be looking at how Equifax has made the mortgage industry more financially inclusive using bill payment data. But Francis, I'm going to pick on you. You can go first this week.
Thank you very much, Polly. So yeah, Novo Payment has released a new research report revealing factors impacting digitization efforts at smaller banks and credit unions. The research, produced in collaboration with Forrester Consulting, also indicates a rise in leaders embracing banking as a service partnerships to level the playing field against larger financial institutions. So historically, smaller financial institutions have had a reputation for delivering better customer service and offering higher engagement than bigger banks. However, in recent times, this doesn't seem to have been the case as much. In fact, it seems that bigger banks and these larger institutions are in fact offering better digital offerings, which, is historically what the smaller guys have been known for. So the Novo Payment 2023 Nimble Bank Playbook was created from the findings of a survey of over 200 digital transformation decision makers at local and regional banks and credit unions with less than 10 billion worth of assets under management. The research found that leaders of smaller banks and credit unions are under increasing levels of pressure to catch up. 87% of leaders have seen an increase in demand for digital services in the last 24 months, while 80% also expressed concern that their clients will move to larger banks. And of course, for smaller banks, you don't really have the luxury of a lot of clients. So, that level of customer service is usually what keeps people about. And if you're not really offering that, then what do you have to offer? And I think that is a big problem. So how could banking as a service change the face of smaller institutions? Well, research revealed that small, local, and regional banks and credit unions plan to partner with BaaS, banking as a service providers, to implement the following next-gen digital initiatives. 51% plan to pursue integration with additional third-party providers. 50% plan to implement online account opening. 49% plan to implement credit decisioning, and 49% plan to implement the creation of greenfield banks. What I really wanted to discuss with you guys is, does this come as a shock, really? Because I think historically, in sort of every sort of world that I think of, the small guys are always known for their level of, personalization. They don't have as many clients, which generally means that they can offer better services to you that are more tailored to you. So as a small bank, or a small banking provider, small financial institution, it's not exclusive to banks. What do you think they need to do more to really compete with these larger institutions who are, as the article mentioned, catching up, and who are doing the things that previously the smaller banks were known for? And I mean, you've got to give credit to these larger institutions because they are adapting. They are finding ways to survive and ways to compete. But I think it is a really interesting scenario and an interesting world. In what can the smaller institutions now do to really, survive? Tyler, what are your thoughts?
Well, I thought this was a fascinating take on the race between the two competitors in the banking industry. I think in order to compete, I think as you mentioned in the article, I think the only way forward really is to come together with different entities along your horizontal offering, and see what you can bring to the table that's new, and use each other's strengths as an advantage against the larger competitors. We've always talked about the power of collaboration and what it holds for fintech innovation in banking specifically. So I really think that sort of a collaborative approach, and this would be the way forward. You mentioned about banking as a service as well. Obviously, that's very very big in the industry at the moment. So I'm sure many will be looking to use that to their advantage. As you mentioned, they were also forming partnerships with third party providers to facilitate that transition. What really I didn't get about the article, however, is that we recently ran an article, a different article on AppRadar, which looked at this is just a very, very small slice of the picture, of course, but AppRadar was looking at the app downloads, a year-on-year view between now and 2022. And it actually showed that the app downloads for incumbent banks and larger banking institutions was actually on the decline, whilst the app downloads for smaller challengers, if you will, was actually on the rise. So I think there's sort of rises and falls in different areas here, and I think that in instance of the app radar findings, that the challengers should really be using their digital nimbleness to their advantage in partnering with people along their horizontal.
I think that's a really, really interesting point to sort of bring in those findings because, they completely, or they give hope, I would say, because I think when I saw these findings from Novo Payment, I'm not going to say I was worried necessarily. I wasn't really worried. It's just I felt that it was maybe not even concerning, but it was just an interesting find, really, in the sense that what they're known for, the biggest selling point is no longer the selling point. So I thought this is what I wanted to discuss with you guys, and this is why I think it is so interesting that you brought up those stats, Tyler, because it still says that there is faith in these smaller banks. It still shows that sure they might not be having this, exclusive offering anymore, but that doesn't mean to say that they're not still on the rise. So I think those findings from AppRadar are really, really interesting and do provide a bigger picture, which perhaps the Novo Payments findings don't suggest. Polly, would you agree with Tyler that partnerships are still very much the key factor for the survival of these smaller institutions?
Yeah, absolutely. And I think, obviously partnership and collaboration is something that we've spoken about for a very long time now, both sort of on the podcast and at the Fintech Times editorially as well. And I think just being able to have those partnerships and have those collaborations really helps to ease the pressure for, smaller banks, smaller credit unions, et cetera, et cetera. I think what I particularly like is how the study from Nova Payment was called the 2023 Nimble Bank Playbook. And I think nimble really is the key word here, right? Like, in order to succeed, fintechs or financial institutions, the smaller little players, they really need to be nimble. They need to be able to act sort of as quick as they can. But obviously, they don't necessarily have the resources available to them as a bank does, a big bank does, which is where, the partnerships and the collaboration really, really come in. So no, I think I agree with everything Tyler said, really. It's just all about how you can sort of succeed for your customers, for your clients. And it doesn't necessarily mean, in order to meet your customer demands and stay competitive in the market, you don't necessarily have to, stay on your own. Like, it's all about collaboration, being agile, and gaining everything that you can. And if BaaS is how to do that, and BaaS partnerships is how to do that, I'm all for it.
It's funny you mentioned like the title of the findings, just because I think it is a really fun way, rather than just the partnerships report that we sometimes see. The idea of a playbook. I'm a big fan of American football, and obviously that's what they call the book, which has all the different plays in it. And the whole idea is to try and outsmart the opponent by doing something a little bit wild, a little bit wacky. And the idea that these smaller banking institutions might be doing these wacky, crazy sort of out of the box thinking. I mean, sure, it might be a stretch to make that link, but I think it is a really fun way to look at the future of these smaller banks, is that they need to think out of the box. They need to think of competitive ways to outsmart their opponents. And again, using the findings that Tyler's brought up from AppRadar, that would suggest that they're doing that. So yeah, being nimble and adaptable and being as smart as some of the best play callers. Let's say that's what small banking institutions need to do. Anyways, moving on. Tyler, I'll go to you, as I quite like the article that you've brought to the table today.
Thanks, Francis. Yeah, I really enjoyed that opening to the conversation, and we shall continue to watch that space, definitely. So yeah, as I mentioned in our intro, I've taken a little article from our monthly coverage of innovative tech this month, which is obviously really exciting, has actually become very popular. So well done to Tom Bleach, who we had on the podcast the other day. Well done for organizing all of that. So yeah, essentially what I really wanted to bring to the table today was this article looks at consolidation within the metaverse and how that's going to bring together different fintech sectors, and ultimately what it will do for the end consumer experience. I thought this is a really, really fantastic article, and it's actually brought together on the topic of consolidation. It's actually consolidated a lot of industry experts too. So it was really, really exciting to see. If we just run through who those experts are and what they say, we have Julia Streets of Streets Consulting, obviously a frequent feature in the Fintech Times for her invaluable insight. And she talks about fintechs creating this sort of amazing experience by mixing elements drawn from different parts of the industry. She specifically references metaverse and the use of real estate in that, and loan financing and insurance. I love that she touched upon real estate, because it's something sort of a bit of a grey area a little bit in terms of the metaverse, but we have seen that come forward. So I would agree with what she's saying. Julia is actually followed by Alvin Khan of BNB Chain, and he actually explains how it's creating like a new asset class within the metaverse, where people can sort of invest. Again, he touches upon real estate in what he's saying, and he says it will create a new investment opportunity for fintechs to sort of place themselves on this unified platform. And this idea of a unified platform is actually carried on by Kamala Lardi of Lardi and Partner Consulting, who also contributed to the article. Kanala, she talks, of course, about the unified platform, but also how it could be used for financial education, and about how it could be used to sort of educate and increase participation in different areas of the industry. She specifically mentions instances of trading, peer-to-peer lending, cross-border payments, of course, as well, could all go through the metaverse. So it's a very, very interesting take. I think one of the defining comments in the article, however, is right at the bottom. It comes from Justin Pasalakwa, who is the North American Chief Market Officer of Worldline. Obviously needs no introduction. He does talk about creating like a unified platform for everything. He gives a very good example of avatars going to a virtual gym, and they have their membership payment paid for with their digital wallet, or maybe they're using NFTs, or maybe directly from a bank account. Or, of course, in that one sentence, he's brought in a lot of different elements of technology. He goes on to talk about insurance, lending, the use of buy now, pay later in certain instances. And of course, goes back to what Alvin Khan was talking about with the new asset class. He also talks about the wealth management aspect of it. in all, he says it will create an elevated experience for anybody who uses the metaverse. And I did really, really like this article. I think the metaverse is obviously a fascinating area of the industry, but I'm just really struggling to see. This is quite a pessimistic view, but you can bring in everybody that you want from the fintech industry, but I just don't really see how it's going to catch on unless the metaverse drops or lessens, should we say, its sort of association with gaming. In a way, I just don't really like. For example, in Justin's part at the end in from Worldline, he talks about, as I said, the use of gyms in the metaverse, and it's like, how is a virtual gym going to do anything for your physical health? You know, and I'm not really on board with where the metaverse is going right now. And I know that's a bit hypocritical of me, because I was on stage a few months ago talking about payments in the metaverse and how wonderful that would be. But I'm really I'm really struggling to see how this was actually going to be applicable, no matter how many people you bring on board to it. What are your guys' thoughts? Sorry, I just sort of got a bit of word diarrhea there, but I'm really, really interested to see what's your take on the metaverse. Do you think that the consolidation of different people could overcome its sort of the barriers to entry? Francis, what's your take?
I really appreciate the honesty there, Tyler. I think a lot of the time, we hear about technological advancements and the instant response is, this is fantastic, this is great. So I think it is quite refreshing to hear a point of view which says, no, I don't agree with this. And I think the points you've raised are extremely valid as well. A virtual gym, you're right. How does, the gym is something that you have to physically do to help better your health. And if you're going to a virtual one, it's virtual, right? Your
But then why
avatar's
would you
getting
pay for
fit.
that?
No. I'm agreeing with you. I'm saying, like,
Yeah,
this is what I mean. But one
exactly.
thing that I do find very interesting about the metaverse, and you might not agree with me here, feel free to disagree, but when we've thought about digitization and the advancement of technology, a lot of the time we look towards automation, and automation removes the human element from the process, essentially. And a lot of the times it's good, and it works very well, but I think it's important to have that human touch, right? And if we look at chatbots and AIs and all these different elements of things, we see a lot of the time a lot of frustration emerge because people, customers, and businesses alike, probably more so on the customer side of things, if I'm being honest, they're not getting the answers that they want, and they're not feeling like they're being heard because they just get referred to these frequently asked or FAQ pages, right? And it just doesn't seem to really be doing justice to the great thing that is the digitization. One thing that has been highlighted in, or a couple of times actually, in the article that you mentioned and in other ones that we've done this month, was Slava Podmarini, I believe his name is, CEO of technology partner Vizchek, explained how the metaverse could specifically improve the relationship between fintechs and customers. And this, in addition to a comment from John Burris, president at MetaJuice, in another metaverse article that we've done at the Fintech Times, the two of them seem to both highlight the importance of communication and how, ironically, the emergence of the metaverse could actually create more of a human touch for people. And I get the irony in that, the idea of you're going into digital, theoretically that usually means a decline in sort of human interaction. But I think the metaverse does have a very, very good opportunity to bring people together. Sure, it might not be, I think it needs to, not be a replacement for real life, but in terms of a way to communicate with people, for example, in a better way, like let's say you're going to an event, right? An event with panels, right? Not like a festival or anything like that. But you're not able to actually attend in person for whatever reason. You're not able to fly out. You can't afford it, perhaps, or it's just not feasible. To have this virtual experience where you can go around and talk to people as if you were there, I think, I can't remember where it was, but I think that is a really, really cool idea, and it is a way to ensure, connectivity. And for people that have sort of mental health issues or like anxiety and stuff who aren't really able to attend, events for whatever reason. I think this is a very good way of, overcoming that and in turn creating a more inclusive society. I get where you're coming from, Tyler. I completely do, in the sense that, it does have a long way to disassociate itself with gaming. But I do think there is, light at the end of the tunnel, and I think we are going along the right lines. Sorry, I kind of went on a bit of a ramble there, but
You did, yeah. I think, yeah, you've raised a lot of points, first of all. I think, yeah, it's definitely got some benefits to it. I think it's lack of relevancy in some areas doesn't undermine the benefits that it does bring forward. Polly, what's your take on this? We might need to do it quickly, but
So don't worry, I'll be quick. So I am going to agree quite heavily with Tyler and sort of go down your route in saying, I don't get it. I don't get the metaverse. I've never got the metaverse. I don't understand what it is. I don't understand what it's going to be like. In my head, it's going to be like Ready Player One. That's kind of how it's been pitched to me, at least when I've read stuff. It's going to be like Ready Player One, and we're all going to go and, like you say, go to the virtual gym and go to virtual shops and live in this virtual world, and I just don't get it. And I probably shouldn't say that because, being a fintech journalist, it's my job to get these kind of things, but I just don't get it. And I don't see how it's going to have an application to like real life. And I feel like a lot of, just generally speaking, kind of no one else seems to know how it's going to impact people's real lives and people's, and different industries. I feel like there's a lot of like hype talk and a lot of, saying how amazing it's going to be and how cool it is, but actually we're not there yet and no one really know. Again, that's just from what I've seen. I could be completely 100% wrong, and I would be, obviously hold my hands up to that, but I just don't get it, and I just don't see how it can be useful. I don't see how it can be practical. um and this, I mean, if it's like an immersive interactive environment for like buying and selling and like trading, like, I guess, I don't know, crypto or game assets or like gaming, that is how it made sense to be. But now it's sort of turning into something else, and that's, I just don't get it. So I'm completely with Tyler. I to me, in my head, it's a game. So the fact that it's apparently not a game anymore just completely confuses me. And that's all I'm going to say about it, because I don't think I'm qualified to say anything else about the metaverse when I just completely do not understand it at all.
yeah, there's a lot to comprehend with the metaverse, isn't it? And it's like if you cut it like at any other point, there's always a different answer to it in a way, which is what makes the conversation so fascinating. But yeah, this is part of our innovative tech outlook on this month. So I'd advise anybody who's interested to head on over to the Fintech Times to discover more. But why don't we head over to your article? Why don't we finish up with that article, Polly?
Yeah, thank you, Tyler. So my article is very much not about the metaverse, but it's how Equifax has made the mortgage industry more financially inclusive using bill payment data. So US-based consumer credit reporting agency Equifax has made specific telecommunications, paid TV, and utility data available to the mortgage industry in an effort to help support financially inclusive lending. So obviously, when you want to buy a house, you get a lot of credit checks and other different checks on kind of like your finances and things like that. Yeah, so traditionally, obviously, credit reports don't tend to use things like, rent or, paying for your regular expenses. So this actually could make a huge difference to sort of consumer financial profiles. And the move could enable more than 191 million consumers in America to achieve better opportunities for home ownership. So I just thought this was really interesting. Obviously, we talked about mortgages a lot, and just sort of generally, we've spoken about financial inclusion before. So I thought this would be really cool to bring up today and sort of talk about credit checks a little bit more, and how much that, you guys are, I guess, sort of your thoughts on just sort of credit checks in general. Because I know one of sort of the major criticisms of credit checks and stuff when you're looking to get a mortgage is that they don't tend to take into account like rent payments, even though a lot of the time rent payments are a lot more expensive than a mortgage and you're paying it regularly, so that should therefore show that you'd be a good borrower, but they're not taken into account. So I wonder, is this a step in the right direction, using sort of telco and other utility data in credit reporting? Because, a lot of more data drives better decisions. That's something that we've learned throughout, the industry, throughout, the world. When you have more data, you can make better decisions. So clearly this would be a good thing. But what do you guys think? Francis, what are your thoughts on this whole thing?
I completely agree. I think it would be a fantastic addition to be more inclusive, and the more, like you said, the more data you have, the better the decisioning can be. I think it works really nicely with a guest post that we recently received from Synapse, which was looking at gig workers specifically, but it was talking about how when gig workers are applying for a mortgage and stuff, their jobs aren't really considered stable income. So therefore, when they're applying for a loan of any kind, really, it doesn't even need to be a mortgage of just any type, they're not given it because they're not seen as reliable, borrowers, when in actual fact they are. So I think just in general, the more data you have, it's always going to be beneficial. And so yeah, I think it's a great thing from Equifax.
Yeah, absolutely. And, completely agree with everything you've said. And, it just ties in with stuff we've spoken about before in terms of better access to financial services, and different opportunities and things like that. And at the end of the day, if this move helps people buy houses and get on the property ladder, then how can it be a bad thing, right? But Tyler, what are your thoughts on this whole thing?
Yeah, I think this is a really, really good example of fintech inclusion in action. And I think that we should be using all the data points possible to assess people on their credit worthiness, and when distributing mortgages, especially, but also when making short-term loans. I think that this use of data from the telecom side of it, from the pay TV, is really, really special. I think that it'll go further to make sure that people get the services that they need, and services also, more importantly, that they can afford. I think we've seen a lot of use cases in the mortgage and lending industry specifically that have tried to find ways of determining people's creditworthiness more carefully. And one use especially was through the use of open banking, which I think is really a really good way forward. But seeing initiatives like these in the market is just quite reassuring as well.
Yeah, I absolutely agree entirely with that. And I really hope that other sort of credit reference agencies sort of really take it on board as well. And just generally, we see a movement that is in the benefit of the consumer, and just getting more things on. If everything is reliant on a credit score, then why not make it easier to have a good credit score? And I think at the end of the day, that's all we can hope for. So that was a really nice, short and sweet one to end the podcast today. But thank you so much, guys, for bringing your stories to the discussion. If you'd like to hear any more about anything we've talked about today, or just generally want to learn more about the fintech world, head on over to thefintechtimes.com, where you can read plenty more news and insights all about fintech. But then very quickly, let's move on to what I learned this week. So each week, so much new information crosses our desks, being on the Fintech Times editorial team. So we wanted to share it with our listeners. So Tyler, what did you learn this week?
Thanks, Polly. Yeah, this week I was delving into a story on the introduction of the Data Protection and Digital Information Bill in the UK Parliament, and its attempts to make reforms to the EU GDPR, which of course was very poignant given our departure from the EU. And basically what they want to do is just make data use a bit more streamlined, make it a bit more accessible, and it's also redefined what it means to have a legitimate interest in somebody else's data, which is really interesting. So yeah, I was glad to cover that story.
Awesome, thank you, Tyler. And Francis, what have you learned this week?
This week, what I've learnt this week is going to be a bit of a teaser for an article that we've got coming up, an exclusive. And it's about the WhatsApp payments in Brazil specifically. It's received the green light for business payments since 2021. P2P payments have been viable and accessible, but now the regulators in Brazil have allowed WhatsApp to venture into the B2C world. So yeah, there's going to be customers being able to buy things through small businesses via WhatsApp, which I think is really cool. And like I said, we're going to be doing an article on it. I'm not sure if it will be out by the time this podcast comes out. If it is, if it isn't, I should say, keep an eye on the Fintech Times. It's going to be a banger.
Love that cheeky little promo there. I'm all for it. And what I've learned this week is that AstroPay has launched a new Visa debit card co-branded with the football club Wolverhampton Wanderers, and I enjoyed that news this morning when I was looking for what I learned. I always love a fun football and fintech partnership. We've done a little bit about those before at the Fintech Times. So you just love to see it. But anyway, guys, thank you so much for joining me on the podcast today. It's been a pleasure to talk with you. all about fintech. And I guess I'll catch you on the next one.
It's been great, guys. See you next week.
See you next week.
Thanks for listening to the News and Views podcast by the Fintech Times. Don't miss next week's episode and continue the conversations using hashtag TFT News and Views and follow us at the Fintech Times.